All right. Thank you for braving the crazy traffic tonight. I don't know what's going on out there, digging up the water lines or something. It's always an adventure these days, but you made it. So we're kicking off a little late. Everyone help yourself to pizza if you haven't. This is the penultimate pitch prep. One more section, but this is the last of this style. Next week is pitch deconstruction. I'm Amy Duncan. No, I'm not. Amy Duncan. You aren't paying attention. Amy is out tonight, so I'm gonna sub in best I can. Not that familiar with those slides, so I'll probably make up some things on the fly because I'm an entrepreneur like you guys. All right, sign the attendance form if you haven't already. It's out front. You probably have registered. Tonight's doubleheader is going to be fun. I love talking about traction, and I'm going to do so. And then you get to spend some time with Silvia Mah, the great Dr. Silvia Mah, my teaching partner, and she's upstairs. Which is a different thing. She'll be down here in a minute. She's going to talk about funding sources and finding the best investors. Two things we both know a lot about. Boy, we have a lot of partners in this awesome ecosystem in San Diego. We've seen them all before. I'm not going to name them all. But we have some great partners. And we have some great grant partners too. Federal government taking a lot of flack right now for good reason, but they are still funding entrepreneurship and small business. We are a regional innovation cluster, one of a few in the country. According to our spies in DC yesterday, AKA my boss's boss, we are fully secure for the year and they're not going to be slashing anything. So hopefully that is the case. We're also funded by the state of California, and Accelerate California is our grant, and SBIR and Build the Scale, which is another grant. So we run on taxpayer money. Everything we do is completely free for you, entrepreneurs and founders. As always, San Diego is the best place to ever start a startup. And this is why all of these different groups, not competing for space, but actually working together, collaborating. Startup San Diego is a nonprofit that puts it all together. We're scattered throughout here on probably in half of these groups. And the point is we all collaborate here, whether you're curious, committed, or crushing it, good old SoCal parlance. We have something for entrepreneurs at every stage, from idea to private equity. So tonight, the agenda is completely blown, thanks to traffic, but that's okay. We're about 15 minutes late, and I will be as quick as possible here. So we're going to do traction first, then Sylvia is going to get into funding sources. And I'm not going to go too deep on this, but the Brink is all about driving economic impact, helping founders, offering no cost, one-on-one, world-class consulting to help innovation. You have to be an innovative founder to find yourself at the Brink. So all of you are welcome, and we're here to help you access capital and build investable companies. So you've been here. I see a lot of familiar faces, which is exciting. So you're taking it all in. Everything we do leads up to the San Diego Angel Conference, which we're about to kick off in 10 days when we hand over the baton to San Diego State and we start working with new investors and training them up just like we do with entrepreneurs in the B-track here. So it's been 8 weeks or 9 weeks that we've been working to get to this point. This will be our last training session, and then we're going to have a wild pitch deconstruction next week. There will be a lot of fun. Amy is the director at USD. Kathy is the director at San Diego State. They both work well together. Seen them both this week, and the collaboration is going really well. We're pretty excited. I think this might be the big San Diego Angel Conference yet. So tonight, traction. Next week, pitch decon. And then the day after, so next Thursday is the application deadline for San Diego Angel Conference. You get your applications in. It's an event you don't want to miss, and especially if you're raising money. Even if you're not, committed to raising a lot of money, it's a really good time to come out and meet all the investors. You never know when you might meet the right investor that changes your life. And then after you apply, Friday, We're gonna have 2 days of angel training, and then Friday night, a big celebration at San Diego State, all leading up to 3 months of San Diego Angel Conference, the big finale, June 5th at San Diego State. So, and lots of judges next week, lots of well-known investors, my colleagues and myself too. So I get to be a judge next week. This is a year-round program, really. We're kicking it off in January, finish in June. But we work around the calendar for entrepreneurs and investors, as you can see, SDAC in June. So if you have not applied, you can scan this code. It's pretty easy to find. Type in San Diego Angel Conference. Get your applications in for SDAC. And so you can scan. You can also go to San Diego Angel Conference.org, I think it is. All right, so next week, this is important so that you know what to expect. We are doing 1-minute power pitches. Everyone can have an opportunity to stand up on stage in front of 10 real investors and give us your 60 seconds. And we'll probably have dozens and dozens. Sometimes it's 50, sometimes it's 75, it's 100. It'll be fun. Everyone gets a minute, no commentary, just wing it, do your best. And at the end of it, we're all going to vote on who we want to see. 3 people do 3-minute presentations. So bring your slides for 3 minutes. That does not mean 20 slides. That means like 3 to 5 slides max. But that will be a great opportunity to have the slides that you're working on. The most important one, traction being one of them, of course. Reviewed, critiqued, commented on by judges. So it'll be fun, it'll be fluid, it'll be kind of a party at the end of everything we've learned, and some really good feedback. You learn a lot by watching each other too. Well,
quick question. The slides are mandatory or it's up to us?
No, we won't see the slides, but for 3 founders we pick to go to the final and present it for a longer period. So 1-minute pitch, no slides, everybody, and then we'll vote on three companies. So you can bring your slides, but if you don't have any and you don't want to, even if you win, but everyone should have slides at the ready, always on your phone, flash drive, whatever. You never know when you might. All right. So we've been over this a lot. I'm not gonna. What's that? So winning pitch formula, introduce yourself, talk about the problem, the need that you're addressing, identify your target market, brief description of your solution, your product, what makes it unique, and don't forget a call to action. Like, we are raising funds, we are launching, we are looking for co-founders, we are looking for investors. There are a lot of different things you can put in there. 1 minute is all about letting us know who you are and why you're starting the company, what's driving you, your why. So here's another, if you would like some pitch prep advisor pairing, scan there, we can get you put in touch with a Brink advisor. Yes.
I was wondering, in the culture here for the 1-minute pitch, is it best to focus mostly on the company, do you think, or is it because when I went to Shark Tank, I kind of studied I went to apply for the casting call, and the culture was to more do part your business and part yourself as the founder.
Yeah, that's a good point. I work with entrepreneurs every day, and I like everyone to be very comfortable at having a 30-second presentation about themselves and why they're doing what they're doing. If you have the attention span of someone and the room for a minute, then you can get into more of the details about your business. But every pitch you ever do is always about getting the next meeting. So if you're at a conference or if you're in a speed pitch in construction, you have 30 seconds. You want to be really memorable and really sincere. You want anyone you talk to walk away going, wow, that entrepreneur really cares about what he's doing, and he has the tenacity to succeed. I would like to know more about the business, because you can't fit it all into 60
Yeah.
seconds, right? So you're right, so it should be a little bit about the business, a
Okay.
little bit about you. But, and you can do that a bunch of different ways. You can do bullet points, you can tell jokes, you can tell a story, whatever works. It makes you memorable. You don't have to dress up and put on a costume, but, you know, be memorable for who you are. And always, always tell us your company name and your name first, and finish with your company name, because the human brain will lock that in.
Thank you.
Okay, follow us on social. I think, and then we have an investor readiness series on March 3rd, 3 o'clock to 4 o'clock. So that'll be fun. Let's. Go to. All right. So that concludes my Amy impersonation. Now, let's talk about traction. One of the most favorite things a venture capitalist says. Tell us about your traction. What kind of traction? Or usually come back when you have more traction. So it means a lot of different things to different people. It's the great undefined term of seed stage investing. And we're going to pick it apart. So every deck that I see, usually 10 to 14 pages, the better ones usually have a traction slide. And investors are trained, and they train a lot of them, to look for traction. So I think it's really important, so we carve out a big chunk of time for it. This is my way of looking at pitch decks. I see thousands a year, and when I lash through them, I always look for 4 key things, my TOTS: team, opportunity, traction, sustainability. We're going to talk about the second T, traction. That's Napoleon Dynamite, for those of you who don't know. Excellent, excellent film. So we can break down each one of these pillars many times. We're just going to take a look at traction today. So in the dictionary, it's, traction means tires sticking to the road. It also means surgical devices pulling your bones back together. But it really, for what we're talking about, an idea gaining popularity or acceptance. So for entrepreneurship, it's really about being able to show someone that you have product market fit. That's the holy grail. Best way to do it is by showing growing revenues, customer reviews, that they're coming back and getting other orders, they love your product, and that your metrics are accelerating month over month growth, year over year growth, margin expansion, that sort of thing, and not the vanity metrics that a lot of us think of as traction or IC index put in. And I'm going to talk about all of the vanity metrics I don't want to see in your investor deck. And let me say, I'll probably say some controversial things, and it may hurt some entrepreneurs' feelings, but I'm telling you what investors look for. And as an entrepreneur, you want to be able to think like investors. So you want to be able to give them what they're looking for, and don't call things traction when it's not really traction. So that's what we're going to do today. I did a little crowdsourcing because I was having fun with this. Instead of just talking from my perspective, I wanted to get industry perspective. I talked to some professors who have written books about entrepreneurship, and their version is very customer centric, which I think is great. When products sell themselves, or when customers love your product so much, they do all your marketing for you. That's the evangelical customer, right? So someone who's out selling your product for you. Now, investors have a much different, more financial approach. And really, it's all about product market fit. So that they can see in your numbers that your product sells, and your customers come back. Some people, I've heard, $1 million in revenue, that's a magic number. I know that $10 million in is a magic number for venture capital, but for angels, maybe $1 million is a magic number. Decided de-risking the situation. I mean, traction is when there's an acquisition offer. That's when someone sees your business doing so well that they're willing to buy it. That's very, very deep. Jason Calacanis, legendary angel investor I do some deals with, his metric is 15% month over month SaaS paying customers, very specific. But everyone has a different definition. So why even track this? Yes.
I was wondering, what would you suggest, what your definition be as an investor for a company that's pre-revenue?
Well, we're gonna get to that.
Okay, thank you.
So, it's hard when you're pre-revenue to show traction, and sometimes you have to show other things. And that's why people throw on things that don't
That's
really
why
count
we-
as traction. We'll talk about it.
Okay, thank you.
So there's a lot of reasons to track traction. As a founder, it's important to just, take the pulse of everything you're building, every chance you get. Staying positive is really hard as an entrepreneur when it's such a grind. Sometimes your team needs to see something that, okay, we're moving in the right direction. Your spouse is saying, why are you doing this and not getting a real job? Like, well, we're in this incubator. We just won this award, we just hired a co-founder. So sometimes it's motivating teams. Sometimes you have early stage investors who want to see quarterly reports or monthly reports that you're actually doing something. People just say, well, nothing happened this month, nothing happened this quarter. And then, sometimes you're in an accelerator and they have rules and they have a website and newsletters that they want to put out. Investors see it very differently. They understand if they've been founders that motivation is important, but for them, traction is all about de-risking. Everything an investor wants to see before writing a big check, it's all about de-risking the opportunity. So they want to make sure that you have the best possible chance to succeed. And traction, in whatever shape or form, is de-risking the investment. And the best way to prove that you have product market fit, you have traction, which means generally revenues. And then another reason investors want to see it is they have to keep track of their investments and mark to market. So being able to put a valuation on the company and know what their investment is. And like I said, it's the buzzword in venture capital or DEX. So I want you to be familiar with it. And there are, I want you to remember this, RUG, revenue, usage, growth. So anything that is remotely close to revenues, customer usage, or company growth can be really good traction. So there's 4 stages, like a lot of you have early stage companies and you have no revenues yet. You have no traction demonstrated. That's okay. You just need to know where you are. If you have customer interest, that's stage 2. Maybe you have LOIs or you have some customer leads. You think you're going to close to customers, stage 3. Stage 4 is you have customers who will pay you for what you're selling. All right, so some real traction signals are monthly recurring revenues. That's easy. Daily active users, that's a real bit of traction. And you can see revenues, usage, growth, net revenue retention, organic word of mouth, not paying people to talk about it, but people on social media talking about your company, talking about your products. And then having a customer acquisition cost that is very low compared to what you're producing. So revenue, usage, growth. Revenue is better than recognition. Usage is better than awards. Growth, much better than price. All right. I talked about Jason Calacanis. This is his little doodle. It matters because for a founder, you want your valuation of your company to be as high as possible. And for an investor, you want the value of the enterprise to be as high as possible. So this green line shooting up here for the average startup shows as you go along the bottom from idea, mock-up, MVP, all the way to revenue, your valuation goes up significantly. And if you see bottom right, this launch accelerator, these are companies that Jason invests in early at a $2 million phase. And then up there, the syndicate is where they do the next round after they have hit paid pilots and revenue. So they go from $2 to $8 million usually based on traction. So that's why traction is so important, because you'd much rather be out raising an $8 million valuation than 2, right? So if you put a traction slide in your deck, which I recommend if you have some good rug to share, do it early. Because like I said, I rip from decks looking for that traction slide. I'll look at the team first, I'll look at the market size, and I'll look at the traction slide. If there's not one there, I'm already 2 for 3 and thinking, okay, maybe this isn't a good deal. Maybe this is too early for me. So put it in early, right after problem and solution, traction, then you show it's not just an idea, but you actually are building something that customers love. Right. Yeah, if you put it in, you can put your team in earlier. If you have a great team, you can put your finances early if they're great. You don't have to stick to the tried and true Guy Kawasaki 12-step program. I love seeing a traction slide early, and quite often I've seen really good, smart founders who open with their team slide. It's like, we're all ex-founders, we've already had exits, we came together to build this dream team. This is what we're doing. So we sort of know what traction is, right? Revenue, usage, growth. Let's talk about what is not traction. Maybe this is controversial. Cool companies. Connect is a good friend of ours. A lot of Brink clients are cool companies, but the awards that you get for being an entrepreneur, whether you're an incubator or whether you're winning cool companies and you're on stage at Beckler Park, is not really traction for venture capital. It's not really traction for investors. So, don't put that in a traction slide. You can put it in milestones. You can put a logo like that by your picture, by your name. Just don't call it traction. Another thing is out there trying to get awards. So 30 under 30 Fortune, Clean Tech 100. All of that is cool. It's really cool to send your mom. It's really cool to show your spouse who says get a real job. You're like, no, I've got traction. I'm doing it. But it's not real traction. Talking at conferences, TechCrunch articles, the social mirage. Like, as an investor, I want my founders trying to find out what their customers want, and building that, and getting more customers and talking to me about what's working and not what's working. I don't want them necessarily going from conference to conference and talking and trying to be the experts on whatever the business is, because it takes time away, and you've got to run your business. Another not traction is pilot projects. This one is, and I've fallen into this trap too. Like, quite often early on, your first customer is an unpaid pilot. It's a demo. You don't know how it's going to work out, but you're trying to raise money. It's like, oh, and this happens a lot in pharma because, that's how they do business. But more than likely, the first unpaid pilot is not going to lead to meaningful revenues. So usually it's a failed experiment. So I would stay away from that one as well. All right. A phenomenal waste of money is trade shows. Yes.
What about paid pilots? Does that represent something different?
Yes. Yeah, paid pilots is a little different. But it is still like investors, investors will call it what it is. And that's not recurring revenue. It's not annualized recurring revenue. But yes, paid pilot's much better than unpaid pilot. But be careful. Just be very, very transparent about disclosing that it is a paid pilot, and actually make paid giant capital letters. And then, any investor worth their salt will say, how much is the pilot? When does it end? What happens after the pilot? Is it an option? Like, if things go well, are they required to extend the contract? All of that. A lot of times the first one's free. That's okay. Just be careful with unpaid pilots and call it traction. And trade shows, you can spend $1 million a year just going from trade show to trade show, setting up shop and collecting business cards and not really talking to customers. So being invited to a very expensive trade show is not traction. That's just a trade show marketing to you. Another one we see a lot is counting the freemium. So we have 100,000 users on our platform. We're trying to get to 1 million. Okay, that's fantastic. Great start. How many of those are paid? None. It's all freemium, but we think once we raise $5 million, we'll be able to convert them to paid customers. That never happened. Premium never converts, not never, but less than 20% of premium converts to paid. So be very careful using that as your customer usage data. Also, letters of intent, LOI. Just because a big company that maybe is interested in your technology, quite often they're just snooping around, seeing what technology is in the field. Just because they've given you an LOI and wants to look at your tech doesn't mean they're going to give you a contract and be a big customer. So be very careful about LOIs because good investors will insist on talking to the customer, and that can be really weird. And it can also just not lead to any revenues. So be careful there. And finally, also not traction. Celebrity angels. Quite often, Shark Tank you mentioned, these known angels will take a little money to be the celebrity spokesperson. And just because they are on your cap table somehow does not mean your business is very good. And most of the companies coming out of Shark Tank fail at a higher rate than the companies we invest in here. So keep that in mind. All right. So there's lots of different things about not traction. Yes, sir.
Is it possible to take that banner away? It's blocking the last few lines.
Yeah. I was wondering that too.
How do we do that?
You were there. Click on more, and the third from the bottom, hide floating meeting control.
There we go. Thank you. Thanks. Well, we lost all the punchlines on all the slides. They were very good. Yeah, so, startup gives 2% of equity to a celebrity for a future promotion. Happens all the time. So don't fall into that trap thinking that investors don't know that. Kevin O'Leary is, he's on the cap table of thousands of companies. Okay, so let's play a little identify traction game. We're going to look at a few different slides from real decks and keep in mind what we're looking for: revenues, usage, growth, right? What do you think about this one? Anyone like it, hate it, don't know? This is a real company. There is real money. So this traction slide, I kind of like it, but it needs to be much more specific, right? It says, oh, 1.6 million in contracts. That sounds good. But then you realize, oh, they're government contracts. Might have to pick that apart. And then customer pilot plans. What does that mean? You have customer pilots, plans to do pilots? Are they paid pilots, unpaid? Who knows? Great logos, but then you're like, oh, 1.6 million, how much is really there? How much is a grant? And how much is really contracts? And then they kind of mix in some commercial strategy and then future projections of 2027 and beyond. So really love all the logos. It looks great. I'm ready to write a check when I see all those logos. It's like no risk here. But then you start picking it apart and then it's a little dodgy. So I'm going to show you all different ways to do this crazy thing called traction, and none of them are perfect. And your job is to figure out what's perfect for your business to show that you understand your customer, you understand the value proposition, and you can tell everyone why customers love it. These are good examples of, all right, this one, great company, really early stage. This was their traction slide. And I don't know what was even going on here. If it was almost like it was lost in translation through AI, but they named 2 companies that they're going to be working with to do this clean tech project. That wasn't really traction. Their next page was milestones, which I thought was pretty good, actually. This is a pre-revenue company and they have a lot going on. A lot of the things we talked about that weren't traction, awards, incubators, pilot projects, even think some vanity stuff in there like partnerships, but this is a better title, right? Milestones, it shows it's 2024 and they've been doing stuff, even though they don't have revenues, they don't have customers, they're not growing in the traction sense of things. They're doing really well and they've got a lot, they're laying the groundwork for traction in the future. So point of this is, even if it's not traction for venture capital, the things you're doing matter. You can call them milestones. And I love seeing a deck that has milestones. Pre-revenue, we're early stage, we're 2 people, we're just trying to figure it out, but we've been doing this for the last 6 months, 60 months, I don't know what it is. And you show everyone what you've been doing because we know it's not easy to start a company overnight, even though maybe you can with AI. But everything you've been doing in the past matters. It's just called traction. All right, here's another one. Really simple. I kind of like this one. We've got revenues. We've got growth. And it looks like we've got some usage, right? So this is very high level. It's not a lot of revenue. There's some big names there. Very simple. This is a good traction slide. Revenue, usage, growth. Makes you like a good traction slide is not going to be your entire financial picture. It's going to make you go, oh, they're doing stuff. They have customers. I have someone I can talk to. I can dive into this. I want to have a 30-minute or an hour-long meeting, right? Not just 60 seconds, but I want to invite this company in and we'll hear from them. So this one's pretty good.
Quick question, if that's all right.
Yes, please.
If you pre-revenue, can you have like a projected traction or like a plan for traction?
Absolutely, yeah. I mean, your forecasts and your financials are going to be that. So traction is generally like what's happening right now or recently that shows you're on the path. Until you have revenues, it's always a forecast, right? Traction is kind of retroactive, real time. Yes.
If you have LOI for deliverance upon an agreed upon MVP, so we're saying, this is what we're gonna get you guys, and say you have 500 units, 25,000 from that upfront fee, 60,000 from recurring revenue fee, and then in that LOI contract, 10% off for 2 years, 20% off for 3 years to show multi-year viability. Is that considered traction, even though it is non-binding?
Not by the letter of the rug, but it's pretty good. So I would talk more about that's your go-to-market strategy, right? And I'm a little flippant about traction because it's fun, but unless it's real revenues yet, I'm protecting you from the snarky investor who's going, that's not really traction, right? So you can call it other things and be proud of it, but just call it what it is. So this is our go-to-market strategy.
Thank you.
This one, Silvia. This one I pulled out of a fictional deck for a fictional company that we use in our lean startup course. And it has traction, which is mainly a lot of vanity metrics that we don't really consider financial traction, but good example of like all of the things that shouldn't call traction. But we do it anyways. Like sometimes that's all you've got to work with, right? You've been around for a few months, it's 2 of you, you've been to a few cohorts, you've been to a few conferences, people are taking notice, you got to do something. So, this is a great company with a terrible traction slide. This is a company that is talking about $9.6 billion in Europe right now. And you can't read anything. They're so convoluted. It's forward-looking, backward-looking. They're like on Series C, $150 million raise. And it's just a terrible slide. So point is, you don't have to do great slides once you get to a certain level. But don't ever try and cram that much stuff in there. This one is interesting. This is definitely an engineer, not a graphic designer. tractions. So I see some very small clip art things. And it looks like there's some metrics up there, but they're nothing to do with revenues or customers or growth. See some big logos, but I'm not really sure what's going on. So this one probably could be debunked, and we throw in some metrics like Nissan is buying this and we are serving this many customers and we are growing X%, right? That could be really good, but it's just maybe a first draft and needs a little bit of graphic design. All right, this one is uber simple, a very new company in AI. Very limited as far as number of customers and case studies, and we've got freemium, but 33 customers in the pipeline. It's not traction, but that's interesting. One of them is Qualcomm, right? So I don't know if this is traction or if this is go to market, but point is you can be early and have some impressive traction if you've got a big customer. This one I like. This is another big clean tech company called EarthGrid. They make tunnels. This one is an example of maybe you don't have tons of revenue yet, but you're setting yourself up for having huge revenue. And so all of the things that you need, like permits, the rights of way, all the different states and the lines. So you can see they have done all of the hard work of getting permits as traction, and now the revenues are about to begin. And then this one is what I would call undeniable traction. Company called Grok AI, and their chips are faster than NVIDIA's. I'm sure you've heard of them, and they're growing pretty fast. They're like $1 billion every day. They're 36% week over week growth. I would call that growth. And they're 30x year over year. So this one is definitely high level traction. If you can show anything like this to any investor up and to the right, then that is what traction is all about. All right, so to recap, real traction, right? Revenue, usage, growth, paying customers, not free customers, not freemium, not unpaid pilots. Don't put your press clippings in the traction slide. Don't put your everyone gets a trophy awards. Don't put we went through this cohort, even if it's Y Combinator or Techstars. I don't think that's really traction. And you can put it in other places, put it on your team logo. Just remember, it's all about revenue. So, thank you for listening to my spiel on traction. Make your traction meaningful, and it will come back to you. So, any questions about traction? Yes.
In the angel conference, the competition coming up, how many in the past have been pre-revenue versus like the slides you're talking about? You're right. The problem will become less and less as you become more successful.
Right.
But that early, I mean, raise of hands and some of these in the past, it seems like a lot of early start points. So is there some techniques and, really trying to save the idea, the early efforts prior to the revenue that you would recommend?
Yeah, I mean, using the milestone or roadmap is probably a better way than calling things traction, like the one company we saw. Through SDAC, in the 6 cycles we've done, the 19 companies we've funded, I'd say half of them are pre-revenue, but they're more biotech. So it's more of a binary bet on whether or not they will ever have revenue. But many of the companies that we funded have some revenues to begin with, or at least we're finalizing the first customers. Yeah, milestones, roadmaps, those were good titles for those ones. Yes.
Did you have any input on possibly including those things in other places on the deck? I got a pre-revenue company and you kind of hit everything that that we're looking at besides the awards and whatever. But like we have a free pilot and people working for free and verbal VC interest, but nothing really concrete. Do you have any thoughts on where we could put that in the pitch deck?
Yeah, so a roadmap showing everything you've done to get there and what you think the next few stops are. Every investor wants to see milestones or roadmaps, and you're like, okay, what are you gonna do with the money over the next 3, 6, 12 months?
Yeah.
That's always a good thing to show, because it locks everybody in on the time frame. You can always put go-to-market strategy, right? Because your go-to-market strategy is a pilot, and talk about it in marketing and sales. Traction's generally looking back a little bit, and if you don't have the revenues yet, just be careful on traction.
Yeah, so our milestone slide, I guess, is all forward thinking, so maybe add some past accomplishments to that or keep them separate.
Yeah, I mean, you can call it projections, you can call it milestones. Milestones is good because the cool thing about milestones is you can have a linear timeline that shows anything you want. It can be, we won this contest, we hired a co-founder, we launched our website, we got a trademark, we got our first unpaid pilot. And it's just, as you look at it, totality, 10 things there, you're like, okay, this company's doing stuff, right? They're moving forward. May not be traction, but it's trajectory. So a lot of it's a little bit vernacular, but traction, like when you want to have a traction slide, you want it to show the right things. So that's the point of what I'm saying. Milestones, roadmap, those are really good slides too. Little traction sometimes. Go-to-market strategy is what a lot of people have, or where I would suggest you put your unpaid pilots and your premium customers and your first payer launches, that sort of thing. Cool. Yes, Susan.
Did you answer the question about what percentage were pre-revenue at the San Diego Angel Conference?
I would guess about half.
About half.
Yeah. So of the 19, I'd say probably 9, I think. Yes.
Yeah, so a quick question on that, when you talk about your product, right, or you try to show what you are, right, what you're building, so have you seen, like, in somewhere people put some video, like 30 seconds to explain that, is it advisable or it's not advisable, just try to summarize at the bullet, right?
Yeah, good question. I love videos when they work, and they never work. So a deck has to be something that's static. It can be a little boring, but that's why we really debunk all of this and try and engineer it. I have seen videos fail at the most crucial times in presentations to VCs on a big stage, TechCrunch, it's like straight out of the Silicon Valley show. It happens all the time. So unless you are personally controlling the device and you are 100% that the company's sure it's going to work, I don't do that, but you can always send a link to someone to watch the video. And you can do that a number of different ways. You can have people pull it up on their phone with QR code and watch it. But generally a product video for 30 seconds in a pitch is a failure. So I never recommend that. And I never recommend having 2 people pitch. Because again, it's like a level of choreography that has to work. And you don't really, there's not really that great of upside unless like it's a 2-person team that can have to prove that you can work flawlessly, seamlessly together. You know, it's not ice capade, it's that just one person should present and no videos. Yes.
You have special considerations for companies that have a hardware component where you've gone through the prototyping, the MVPs, and what you're really looking for investment money. It's going from, those small working to a 20-unit, prototype rollout where your product really has to be at that stage in order to get the next proof step.
Yeah, hardware's hard, right? And early stage investors love software and biotech, because they can be big winners with low cost, and there's not a lot of tinkering in the lab and not a lot of revisions. So finding hardware investors for early stage is always going to be tricky, and every investor wants you to work with a contract manufacturer for them to get the prototypes built and then have a scale plan. What investors early stage really do like with hardware is if you can come to us and say, we've sold 100 units. We have enough money to make one, but we have sold them, and now we have a contract manufacturer lined up and we need to complete the order. Can you help us with that? It's not really fair, but that's the best deal.
Okay, so is that a modified letter of intent play that you can say, hey, these are dollars that are in the house, but they're kind of contingent to us raising this amount of money for it?
Yeah, you can structure it that way. I mean, a contract that has no outs is much better than a LOI that, yes, we're gonna look at your technology for 3 months, 3 years, whatever we feel like, and then we'll get back to you, right? I've seen letterhead from, Pfizer and Qualcomm and GE and many LOIs that don't really pan out. So an order, a purchase order from a customer carries a lot more weight with the customer. All right, that's traction. Now, got 5 more minutes? Okay, cool. More pizza. We'll buy a break. Talk amongst yourselves.
.30, and then you guys can all be free. So my part of it is more about fundraising and investors, how to find investors, all that jazz, right? So I did present this in the fall and it is on YouTube, but I know I'm very cognizant of that, but I want to walk you through a couple of things that are very poignant in what we've discussed tonight with traction. And then I quickly went upstairs and tried to get you some examples of slides, because it felt like your discussion right now was a lot about how does it look like in a slide? And I know we're like doing this before pitch deconstruction, so I just want to make sure that I gave you the correct value. And if you need more, we can pull up my computer, and I have so many pitch decks that we can see. And I always pull pitch decks about 5 years old. So, but they look like they're modern, right? It's not like they're 5 years old and they're bad. So first and foremost, the awareness of understanding who's your investors and the fundraising aspects of what you're looking for. So if you're thinking of everybody here is applying to SDAC, right? I'm assuming, right? And I'll do SDAC specifically, but then also talk about a little bit about investors in general. So investors, when they look at your financials, or let's say the financing slides, they want to know, what are you using the funds for? Because they have a way that they're thinking about, how am I going to make money, right? How am I going to make money in 7 years? It's not tomorrow. It's not a year from now. It's 7 years. So if they get something from you that is very high level, visionary, out for 5 years, they love that. And they want to know, well, how are you going to make money in the short term for about 12 months, 12 to 18 months is the use of funds slide. So think about visionary, how am I going to get there? What's my exit plan? But then also, what do I need in the next 12, 15 months? There was a question here about hardware. Hardware is hard. Software is easy SaaS is what investors like because they kind of understand it. So think about, if you can do 12 to 18 months in a hardware, it's more like, what does it mean to get to that next milestone, that next traction? And sometimes it is about getting an equipment loan of some sort. So think about that. It's the investor's shoes are that, have you asked for investments before me, right? Have you asked for your friends and family? Have you put your own money in? Have you exhausted loans? If you're doing equipment, have you actually even considered equipment loans? If you are a life science company, have you looked at SBIR, NSF, NIH? Have you done all of that? I'm sorry, that's just entrepreneurship, right? And then where you are right now, this is where that investor's like, okay, I see all that the work has been put in. I'm an early stage investor, high risk, and I'm going to see what you're going to do in the next 5 years. And I'm going to jump in with you and say, I can help you in the next 12 to 18 months based on this realistic, not like I need $5 million, but 500K, 1 million, 2 million that I can actually invest, as a collective can invest in, so that I can make a difference. Does that make sense? So it's very like, when you look at it that way, you're like, and now I get it. Like, it's not like, oh, they want it this way, I need to do it this way. It's more like, I need to present the story that makes sense to that investor. And we're looking at early stage investors for SDAC. If we're looking at VCs, just so that everybody's aware, they're looking at a fiduciary responsibility for the LPs, meaning GP is a general partner, LPs are limited partners. LPs have said, I love the thesis that you have. You're raising a $50 million fund and you're going to be a really good steward of my money. And I let you decide what you want to do. And that thesis allows for that investor to be like, I have a responsibility to align my investments to that thesis and to what I promise my LPs for. So that's different than an angel investor who's sitting right in front of you, right? So I just wanted to let you know that that's like the differences of it. And you're in an SDAC, it's really angel investing. Okay, angel
Can you go
investor.
back to the
Yes.
previous slide?
Yeah,
What do you mean by the second bullet?
their investment thesis is queen. Yes.
I didn't get it.
Okay, the investment thesis is for an angel investor is that is their North Star. That's as me as an investor, I can tell you my thesis and I will only invest in the thesis that I have created for myself, right? So I only invest in female-led businesses and people of color, right? At the very early stages, pre-seed to seed, from 5K to 25K. I ask for information rights and I want something that is typically an intersection of deep tech and impact. That's my thesis. If you're outside of that thesis, I might talk to you because I'm part of the Brink SBDC, and I want to introduce you to the right investors, but me writing a check to you, that is my thesis, and the gravitas behind that is that I'm going to invest about 85% to 90% of my portfolio in that thesis. Does that make sense?
Yes, but what does queen mean?
Means that is what is your North Star.
Oh, got it. Okay, now I get it.
Yes, is
Yeah.
that's your North Star.
Not-
That is what you are like.
It's like slang.
Yeah, it's like, a little slang. I'm Latina and Italian. I have to like be a little bit spicy. So that is what that is. And whenever I teach investors, even when they're writing their first check, I'm like, what is your thesis? They're like, oh, I just want to write a check. I'm like, no, pause. What is your thesis? What do you want to create a portfolio that is aligned to your values and your mission as a person, right? And especially at early stage, because that investor is investing in you as a person, especially in SDAC. Yeah.
Are we able to access the investor thesis for the people that are just judging SDAC before we submit?
Great question. So typically for angel investors, individuals, you don't really know their thesis. They're not like, I mean, I'm like, I'm very transparent. I'm like, I'll tell you my thesis. Most people have it like internal. It's like their internal clock. And they usually don't, let's say I have it all built out. If you meet them through coffee, yes, you might have that intersect. But SDAC is interesting. So SDAC is a fund. It is not an individual angel investor. It is not a syndicate. It is not a group. It is a fund. And the fund has a thesis. Right? So even though I tell this to Misty all the time, I invest in women and BIPOC founders. The only time I will ever invest.
I what?
BIPOC, people of color.
Okay.
Yeah. The only time that I'm going to invest in something outside of that is an SDAC, right? Because the mandate or not mandate, but what we are investing in can be anything, right? That is SDAC. SDAC is industry agnostic, high innovation, does not have to be deep tech. I'm a PhD in biochemistry and molecular biology. I love deep tech. Give me deep tech, I love it, right? But all SDAC investors don't understand it. They don't have a PhD in biochemistry. So it's very industry agnostic, right? We're not even an impact investor. Industry agnostic, any founder in the early stage, meaning pre-seed to seed. In general, that's like the general thesis, and we get to yes. Like the posture that we have is not that we are a VC and we're going to cut you down. We want to get to the yes. We want to support you. We want you to be successful. And that's why we have quarterfinals and semifinals and finals. And we have everybody learning together. That's the thesis of SDAC.
Okay.
Yeah.
Do you consider Jewish people in that?
Yeah.
In your thesis? Or-
Mine?
Yeah.
I mean,
Or they gotta have,
yes,
like,
it doesn't
their own-
really matter
No?
to me. No.
You said people of color.
Yeah. Yeah, no, it doesn't really matter to me for that one. So,
Okay.
yeah.
Thanks.
Yeah. Any other questions? Cool. So we've kind of gone through this a little bit, the definition. This is a little bit of data on who are the angels and how active they are in the economy. So just for you to be aware, bless you, of the types of investors out there, the mean age of first investment is about 48. So you know, like you're talking to not a 20-year-old, you're talking to a 48-year-old. And that's a typical span of it. The 32% is 51 to 60. So would they really maybe understand AI? They do. They rarely are getting involved, but you would have to maybe do a little bit more of awareness of that. And that's fine. There are investors that are specifically to AI. I run an AI lab at my university, so I really understand it even though I'm 51, right? So like, give me AI, right? So, but other people might not. You just need to know that age. Then it's like the race is there, and then the male and female, and then typically 30% of new angels are women. It's been a really high increase of women who are new angels in the ecosystem. So just be aware of this, right? Making sure that you know that. And this is not SDAC. This is just nationwide. So I don't know if I heard you say something. Oh, wait. This is nationwide. This is data coming from the ACA, Angel Capital Association. So I'm on the board of the ACA. Love it. I live and breathe it. If you want any information about like the angel perspective, go to the ACA, and then they have a lot of workshops and stuff like that. Yes, in the back.
I'm just curious, so like on that pie chart,
Yeah.
it's obviously like a minority, right, 2.3% Hispanic, so.
Yeah.
Is that mainly because there's a larger emphasis on maybe like people who are founders or starting businesses are white versus minority?
I don't know. There's like 1,001 reasons, right? It's like the wealth gap, and if you want to be, this is coming out of data that's only accredited investors. So you see a really increase in Hispanics, Blacks, women in like equity crowdfunding, right? And that's not meaning that they don't have to be accredited. This data right here is from accredited angel investors that have to have a certain amount of wealth. So could it be that? I don't know, right? I'm just saying that this is just data that's out there. Yeah. But interestingly enough, it's like 22% of female angel investors are women. Lo and behold, the number of entrepreneurs who are women who get funding in the angel investment round, 22%. So there's a direct correlation between kind of likes and likes. It's called pattern recognition. You can look it up in Harvard Business Review. It's there, right? Okay, so one thing I also wanted to kind of touch base is that investors are not just giving you capital. There are really a lot of different kinds of roles. And I put it here is that effort for them goes from like zero effort all the way up to massive effort if they want to be part of your board and become part of like a member of your board. And I like this because this is what I also teach for investors is that, you know, of course, it's like they're your source of capital. But you shouldn't just be using them for that. That's why SDAC is so beautiful, because we have so many people that are coming together in the fund that we can really be a mentor to you. Some of the investors are really great networkers and recruiters and PR and marketing, technical experts, advisory board members and board members. And sometimes this session tonight is about how do you get more investors? Sometimes by having somebody who you know is an investor to come in to help you with marketing, they might become your investor because they love working with you. They love the ethos of your company. They love the culture. They love what you're doing. Really early stage investors want to connect with you as a founder, right? So some of them do come, a lot of them come in as advisory board. If you want money, you ask for advice. And if you ask for advice, you get money, right? So that's an old adage. So think about bringing them on as advisors first. It's like a test period so that they really feel really comfortable with you and can bring the value for you. So that's one. Yes.
So quick question on that. So for the angel investor, does that industry really matters? Like, you know, I understand that like, you know, they mostly looking for the founders and the team, but does it really matter? Say, you know what, certain angel investors has a preference on the biotech versus the software versus XYZ?
That will be in their thesis, right? I'll take the answer in two ways.
Yeah.
One is typically an angel investor will feel more comfortable in an industry that they like, right? Typically, right? And they will invest in that industry, but a lot of them are industry agnostic and they love the founder. It depends on their thesis. But for you as an entrepreneur, you're like, what do I take, right? Sometimes I've come in as an investor, not because I understand the industry at all, like they are the experts. But can I bring in my network that they don't have on their board to bring in more investors? And that's what they need from me. Great, but we really have a great conversation. And we're like, okay, the expectation is that you on the board and you as an investor, you're bringing in money and you're bringing in your network. Can you introduce us? Great, no problem. I'm not going to help you with a tech, please. You're the person who's going to know that. And I want you to thrive in that. Give me this chunk so I can support and help you in the scale of your business. So you as an entrepreneur can actually do that. And what I recommend is also looking at like doing a gap analysis of your board. And that's like, this is just a fancy word to mean like who's on your board, who's on your team, and what gaps do you have, right? Technological gaps, marketing gaps, and maybe you can fill it with an investor who might be interested in getting involved. They might have sold their business and they're like, I want to stay in whatever hardware because hardware is hard and I want to help this company and I know XYZ. And you're like, oh, that's a gap that I really need to fill. They feel like they're contributing and you're like, check mark, I got that done. Wonderful. And I might have gotten 25K for it. You know, so I wanted to answer both of those. Good? Yeah.
Am I right to say that the table includes so-called, say, private equity?
Yeah.
And then also family
Offices. Well,
rather inclusive as
yes.
traditionally angels.
Yes, so it depends. My answer will always be it depends, right? I was actually just talking to a private equity woman this morning. She's like, I need to like invest in all of these companies that are coming through. I'm like, whoa, wait a minute. So private equity right now is coming down and into more earlier stage right now, and family offices. They want to see the next Facebooks and stuff like that. And they know that by coming into early stage investing, they're going to see that. But do they do a lot of this like networking, mentoring, advisory? Not as much, but it just depends on, again, their thesis. Like if they are a private equity firm that really wants to like shepherd companies through this process and get them to M&A faster, that might be, and give them some amount of money. Great. There's some family offices that are like, we don't really care. We want about impact. We're going to look at all of them with impact and give them money so that they can do great things. So it just depends. But the answer is yes, right? You just have to know who they are. And then going back to your question is like, well, how do you know? Do you know all these SDAC investors and what their thesis is? You probably don't, but private equity, family offices, VC will publish on a website what they're all about because they want people to come. The biggest currency is like trust first in investing. Secondly is deal flow, right? They want the biggest deal flow for what they want for their thesis. So they just want the big people, everybody coming in, and that's why they publish it. Does that answer your question? Yeah. Okay, cool. Yeah. Okay. We don't have, what time is it? 7:18. Okay. I'm going to run out of time. So this is something that's covered in a YouTube video on SBDC, but I also love to work with entrepreneurs to do this. I have like a white one that we usually do. So I just say, take out a white piece of paper and do this. It's super easy. It takes you like 5 minutes. Talk to your team about it, right? So basically, oh, and I was talking at an accelerator. If you see ocean, it was like ocean in and out. I was talking at an accelerator. So this is something to just be aware of is that time investment by the founder and quality of investor. Not everybody's circles will look the same, right? You might be like, you know what? Platforms like AngelList love me. Like they love my company. I can be on it and I can get investors like that. Then do it. And you have a huge circle and you're like little time investment and quality investors is super high. I don't know what it looks like for you, but just have that conversation with your team to see where is it that we're getting the best bang for our buck, low time and high quality, or that you're like mid time and mid quality is warm introductions. Sometimes warm introductions are not the greatest, right? They're not such great quality because you just get a warm introduction and that person doesn't know that much about that introduction or not. So it just depends. So I would just highly recommend that you do this. Again, it takes like 5-10 minutes. Okay. And these will all be shared and stuff like that. So, and I think everybody understands that. So advisors, accelerators, everybody knows what an accelerator is. So I'm an academician and professor, so I need to make sure everybody knows the definitions. VC, pitch competitions, warm introductions, angel investment groups, syndicates. Everybody understands syndicates? Okay, so syndicates, co-investors in syndicates is that usually syndicates are an angel group that connects with another angel group, and they either just share deal flow or they get into co-investment opportunities together and they syndicate together so that if somebody is raising 500K, one group puts in 25, the other puts in 50, another person puts 100, and they share due diligence. So we decrease the amount of time they're doing due diligence. We're decreasing the time of like increasing efficiency, decreasing the time of due diligence. And it's more of like fear of missing out and we're all in it together. We're gonna do this together. So that's a syndicate.
If I pitch a venture capitalist firm, I needed to ask for a minimum of $500,000. Is that correct?
It all depends. VCs are more down the road. So it's like, that's institutional investors that will want you to be at different stages of your business. So let's say, let's just call it a CPG, a consumer product good. Angel groups want you to be at 3 million, but just to talk to them. VCs will want you to be at 4 million revenue. I'm sorry, I didn't say that. 3 million revenue, 4 million revenue for VC, because they're looking at farther down the path of you being, you know, a company and lower risk, right? So it just depends.
They don't generally invest in pre-revenue companies. I
No.
just pitched to Sound Ventures this week.
Yeah, but let's say Sound Ventures, he's a musician. So like, Sound Ventures might be really great for you. They might have a
Yeah.
thesis that is pre-revenue, pre-seed.
But as I researched more about the company, I realized like, oh, they're really truly a venture capitalist firm. They're not like, I should have looked at
It's
read the
okay.
title more like Sound Ventures.
Yeah, but
Right.
VCs also like to see very early stage companies as just deal flow and keeping a tab on you. They might not invest in you, but they might keep a tab on you as you're growing. Okay? Okay, so I recommend that you guys do this on your own time. We've kind of getting prepared for investors is making sure your pitch deck is good. Your LinkedIn, please have your LinkedIn. Correct. I see a lot of times when I go to due diligence, the team members don't have the company in their LinkedIn. It's not polished, and then that's like the little bit of like worry becomes a bigger risk. I know it's LinkedIn, but you want to decrease risk as much as you can, and that's something that you can have ownership of. You can control. You can't control a lot of things in fundraising, but you can control your LinkedIn. Yeah.
If like I have a distinguished professor on our team that is, you know, not on LinkedIn and just is off Google Scholar, can I put their Google Scholar instead, or?
Yeah, great question. You know, sometimes I thought you were gonna ask another question. That's why I was like, okay, I can answer that one. The professor thing, if they don't, that's fine, right? Is a professor's a little bit different, right? And you might want to say in a note or something like that, saying that like you might be able to put something of scholarly or something like that. But it's when there's like 3, 4, 5 people on the team and all of them except the founder have them on their LinkedIn, and like all of them are like the CTO, COO, and CSO. You're like, you gotta have it on your LinkedIn, right? Kind of thing. So that's when it gets a little bit thing. And then the other question I thought you were gonna have is, what about if you're like incognito? You are at Illumina and you don't want to tell people that you have a new life science company. You can put in the pitch deck incognito, you know, or something like that. And if you're looking at another option, also advisors might be coming in. There was one that wanted like a 23andMe person, and they had a 3-year time period that they could not start a company, but they were kind of advising, but you want to put on your slide because you're like, look, I have a person from 23andMe, but I can't tell you who it is, but I have that person. You know, whatever that is, you can work it around. But it's just, I just think a lot of times I see that all the team does not have LinkedIn. I'm like, please just do something. Don't throw away that. Yeah.
So, the founder needs to have their own LinkedIn profile and a LinkedIn page for their company?
Yes, the LinkedIn page for the company. And then the founder needs to have their own LinkedIn, and then whoever's on the team should be able to link the LinkedIn company on LinkedIn. And if it comes out to be not like a little logo that's all blue, you have to be able to click it. So just check it.
Are people looking, like, are investors looking at how many connections you have on LinkedIn? Like how people
Sometimes.
check out your Instagram?
Yeah.
Yeah?
Yep.
Okay.
Okay, back here. and I have to go through some more things.
How critical would you say posting is for LinkedIn? Is it like?
I'm a LinkedIn girl, so like, I'm like, post all the time, no, but, I think that going with the same, kind of thought process that Benton was talking about is being purposeful, right? Posting to post, it's just not gonna do good, especially when you're fundraising, because you're like, you don't know what they're reading into. Just be very purposeful, like I was at this meeting, or I'm excited about, like next week we have, after you do the, application, there's like a meet and greet or something like that, take pictures out there, and that's something you can post, because not that we're like, oh, so who has posted, who hasn't, but if somebody's looking at your stuff on SDAC on Gust, and they're like, oh, I'm interested in this company, and they don't see anything on your LinkedIn, they're like, well, they're not really, when I see that, it's like, they're not active in their ecosystem, they don't have an advisor that's coaching them. Do they have an advisor that's coaching them? Are they active? All of those things start getting in my mind. Okay, let me move on. We're almost. Okay, I have gone through this in a YouTube class, so we all know, do investors go after the jockey or the horse?
Jockey.
Yes, why?
Because it's the founder that leads the company.
Do you want to invest in an A team and a B product, or a product and a B team? A team, right? So I've done that many, many times. I invest in the founder, and the product is going to change 1,001 times. Trust me. You know, customers are fickle, and markets are volatile. Like, done. Talk to you in 1 year. It's going to be all different. So this, again, we'll share this, right? So this is one thing that I do with a lot of the founders that I work with, is an investor persona. So who's done a customer persona? So a lot of people have done a customer persona. It's the same thing, right? It's the same kind of process, saying, okay, who is my investor that I'm going after? Who's that group up there? What are their relevant behaviors? Are they really active in the ecosystem? Do they care about, let's say, Interlock Capital, right? That's here in San Diego. Are they active in the ecosystem? Yes. Do they care about a founder being in San Diego? Yes. Oh, they're at events. Yes, I can go see them, right? Needs and goals. Do they want to diversify for their portfolio? Do they want a huge deal flow? Do they want to empower founders? Do they take a board seat? All those things, relative motivations, their incentives, their achievements. What is like their drive of power, right? Just kind of talking about those things, and not that you're like thinking I want the best of the best of the best. Like really, what's good for your company, right? Really be like, not everybody wants the like crazy VC. I don't want the crazy VC. Like me, when I see a cap table and they have crazy VCs, I'm like, why are these crazy VCs on here? I'm like, no. Why did you even say yes to them? No. Like at early stage, you don't need that. You don't need that pressure, right? But if I see on a cap table, that's a capitalization table, by the way, that everybody has their percentages of your company. And I see really great angel investors that are pouring themselves into that entrepreneur. I'm like, yes, 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 I'm in, right? It just know that it makes a difference. What are the industries that they like? Their demographics, other notes, and then like, what's their check size? If you can't find it online, that's very typical for angel investors. You can't find it. Look at their LinkedIn, and sometimes they say, oh, I just invested in this company, and it sometimes says a check size, or, you know, you're not going to find that on any platform, how much money they put into a company, but you can. And if they say, I've invested in this company, call up the company and say, hey, you know what? This investor that you just got, I really would love to like meet them and all that. What was the check size? That's a very easy question. There's nothing like bad about that. So, and then you do like an action plan saying, okay, who is that person? What do they invest in? How do they invest in? And I usually ask an entrepreneur to score it based on alignment of the persona, of the investor persona, your values and ease of contact. What's the score? And what is a tier? So if they're first connected on LinkedIn, or tier 2 or tier 3, then you can tier it and say, okay, I'm going to go after the tier 1 first. Bang them out. Like, you know them, you're going to connect with them, and then second and third tier. And so this is an example of Benton Moore that was here earlier. And what he invests, he advises introduction to partners, how through a network or warm introduction or SDAC. The score is that it's about 9. It's really easy to contact him. He was right here, you know, in front of you guys. And then he's like first connected to me. And right now, if you connect with him, he will connect with you for first. Benton, I'm just going through an example of you. So that's what I like to do. It's a sales funnel. It's a sales funnel. And then going out here is, I'll give you another example of Mr. Benton, that another way that you can think about your investors is like a hub and spoke models, right? If you do have an investor that you really want on your cap table, see how are they connected? So Benton up there, does this have a little thingy? No. No. Okay, maybe not. So Benton is a middle way. He's part, and I have to change that TCA San Diego. It's now new fund. San Diego Angel Conference Co-Fund. He's a lawyer. We have Amy here. Again, TCA San Diego, NOC, Stella Angels, SDAC. She does marketing and life science. So, and then this was like a woman who's part of an accelerator. That's where I was teaching last summer. And then let's say like Alicia Robb up there. She's one. All these ladies are my friends, and Benton too. And Marcia. I mean, not Marcia. That's another person. Alicia was like the Kaufman Fellow, the grandmother Kaufman Fellow, grandmother investor, crazy, amazing impact investor. She doesn't invest anymore, and then like up there on the left, she does a lot of Latin American investments. So if anybody's interested in Latin America, I'm going to go after them. But if you can really look at these investors and say like, where are they and how can I get in? This is going to help you. I know it's like really kindergarten, but it helps. Okay, so this is my last thing. I'm gonna go through these and then I'm gonna stop because I know I'm running out of time. I know that Benton went over some examples of slides. So this is one example of Grow Guru and how he had this investment opportunity. This is like 5 years old, right? So there's nothing like we're saying something crazy. So this is one way of doing it, saying, okay, this is how much I'm doing is a convertible note, 20% discount, 6% interest rate, 6 million cap. Really easy, right? You see it at the very top. And what does that look like? And the use of funds are all this risk mitigation milestones. These are all the things that he's doing to fill this round. Would you invest in him? Like, it's pretty clear. And even if you don't know like all the details, the clarity allows you to make a good decision, at least to like have a conversation with him. You know what you're getting yourself into.
You would want the breakdown of the money?
I would, but this is very clear. Sometimes it's like, there's nothing. It's like, I'm raising 1 million. Thank you. Right. It's like, what are you using it for? I like that he kind of goes into like expand sales channels and stuff like that. But it's the clarity is there.
This is the ask slide.
It's the ask slide.
Okay, got it.
This is the ask slide for, of course, one of my portfolio companies. She's amazing. Hydrostasis. I love her. Debbie Chen. She's a Muay Thai fighter. I saw her fight and I was very scared. I was just told, they said, whoever shouts the loudest when somebody like hits, like that's good. And I knew my role of the evening. I was very loud. Every single time she punched, I was like the loudest in the room. A lot of blood. But anyway, so we're raising 500K, pre-seed, did a fully functional demo to our first customer. And this is what she's using her funds for. And of course, she has her like contact us on the right-hand side, but super, super easy. And these are where she has her money coming from. NIH, X Prize, Institute for Global Entrepreneur. So this is a really easy way of looking at the slide before was this one. So it's a financial metrics. So making millions on dimes is that she has all of her information here. The licensing, the integration, and then she has her ask slide. So it goes one right after another, very clear. What I would have done here is like, yes, I know that she got money from Ad Astra Ventures. I would have put right here is that, former investors, Ad Astra, non-dilutive funding from NIH. I would put there, or grants of sizes this much that she's received. So that would be the only thing that I wouldn't have done that on the right-hand side. I would have just done all of the fundraising because she's gotten money from a lot of different people. Okay, I think I went through everything. Yeah. Any questions? Yeah.
You're amazing. Thank you for everything. Appreciate you. I was wondering, I honestly have a bunch of questions. I don't know however many you let me out. One was you've obviously been around a lot of this for a long time. Like, the people that you've seen win and get the
Oh,
investment,
SDAC? Okay.
how, yeah, well, how about out, like even outside of SDAC, like the founders that you've known that have won and gotten an investment? How many of those people got that investment through a warm introduction to a cold introduction?
Whew. I don't know those numbers. I just know, I would say that in early stage investing, SDAC and in any kind of early stage pre-seed, it's how the investor knows that founder. So if it's warm introduction or meeting them here, I always say it takes me 7 times before I invest in a company that I see them, right? It means that one might be a coffee meeting, another one might be like something like this, another time would be some, not that I want to be ornery. Like, I'm not like, okay, my 7th time is the only time. No, it might have only been like 2 or 3, but I really want to get to know you. I'm early stage. Like, I'm putting my money that is not going to my children's education into your company. I want to know that you're going to steward it correctly. You're going to build an incredible company that has culture and has impact and all that. I want to know that, right? And I think a lot of early stage investors want that. SDAC exactly the same way. And I would say the ones that have won are the ones that show up. That, I mean, just like one flew out every single time from the East Coast. That's Rolavo. I mean, just her, it gives me goosebumps. Like, that is the one of the things that we talked about in the finals was like, she showed up every single time and she's like crazy good. Like, she like pitched amazing. She had traction even in the time that she was doing due diligence, like just amazing person, but she came to every single pitch from the East Coast. And she was always like, how can I answer any other questions? Like, that is that posture that you need to have for that early stage investor. I wanted to also say that I said to an entrepreneur in the back is that it's coming up. Gust applications are due next Friday. So know that we have advisors that can help. I'm an advisor. Benton is an advisor. I also do like an audit on your Gust. So you can send it to me if you want. It's just like a little like spreadsheet. I fill it all out and send it back to you. And then also the other thing is that you can apply and do all your Gust profile and go back and edit it. So don't be like perfect until it's all perfect. Get it out there, upload it, and then you can edit it later. Yeah.
So all that in the Gust has to be filled out, is all mandatory, or there are a few things like, because there are a lot of things in that, right, which you have to fill out, or everything needs to be filled out?
Everything needs to be filled out. And sometimes you can just upload a PDF that is blank, right? But then go back and change it, right? I'm not saying that that's good, right? But know that you can go back and change it. And it's nice because whenever I meet with some entrepreneurs, on my side, I can see the Gust and be, okay, this is what it looks like and stuff like that. And we want you to be as successful as possible and in the best light possible. So that's why we're here to do that. Any other?
Yeah, I'll say on the 1 minute, next week is the
Yeah.
power pitch 1 minute. There is a video on Gust for SDAC. We designed that to be the same. So next week, when you do your 1 minute, record 1 minute and upload that to Gust with your application. When the new investors come in, the very first thing they look at is your homepage on Gust with your company and your short description, and then they watch that video. And oftentimes they don't look at anything else for several weeks. So you have lots of time, like Sylvia said, to upload and create better decks and different financials. But that video is the first thing. So have your 1 minute.
I can just do it myself, or
Yes.
does it have to be more?
No, it doesn't need to be a choreographed song and dance. It's you talking about your company and your vision and why your company is going to be successful.
A couple tips. Sorry, I do
Please.
this so much. Not vertical, horizontal video, not vertical. Please, horizontal. About a minute.
Portrait landscape, that's what you mean?
Yeah, landscape.
Okay.
The ones that are the best is that you're just like a Zoom call. You're front facing, you're going through it. I've also seen really great that you go through your pitch deck and you do a Loom video. But I would recommend with that is that you recreate your pitch deck if you want with enough space that your picture is in there. Because if you do it with your slides that you have right now, you're gonna have to move around your person yourself, or like you're covering text on your slide. So if you only have a minute, so you probably have what, like 3 to 4 slides only. Design them so that you can have a big enough picture of yourself on Loom. Okay.
Are you saying I could use slides in my 1 minute pitch?
Some people do. I'm just saying that, I'm just giving you that feedback that you can either do Loom, and that's like a circular thing, and you would put it in one location that you know that you've given yourself enough white space, or on a Zoom with you being as big as you can make yourself, because the investor wants to see you. We've seen like voiceovers of pitch decks, no bueno. Do not do a voiceover. Do not do a product demo. Do not do a product demo. No product demos, right?
Do an AI.
Engineers in the room, no product demos. It might be like a 15-second, I don't know what, but that's not what that video is for, is to see you about your business plan. What are you thinking about that startup? What have you done? What's the financing of it?
This is the first contact you're gonna have with a lot of investors, first of 7, maybe 10. So make it about you and your vision. And if it's 70 seconds, it's not the end of the world, but don't make it 7 minutes.
Yeah.
And if it's 30 seconds, that's fine too.
Yeah.
You have examples?
Yes, is it up on YouTube? I have like, how many do I have up there? Like,
If you want to see examples of pitches, 1 minute, 3 minutes, 5 minutes, 10 minutes, you can go on our YouTube channel. There's a whole playlist of workshops with Sylvia. Feel free to watch those. They have all kinds of examples from all the past SDACs.
Yeah, I don't give you, again, like, I don't give you the SDAC from even last year. I go back like 5 years, so it's not anything that is, and I make sure that they look good, right? They're not like, only like one. I said vertical, no. Yeah.
So 2 pretty quick questions, I think. One is, so when the winner wins SDAC and they're getting this, like, I think the people last year got 300 grand from like this fund of, it's like a fund of many investors, right?
Yeah.
Does that person have to give up equity for that money, or do they get the money with not giving up any equity? And the second question was, if you have an email format that you suggest using to reach out, cold emailing investors or venture capital firms in like the message format.
So I'll take the cold email. I also have a YouTube video on that. This deck that I showed today has like, the original one is like 70 slides long, and it has 3 examples of emails and stuff like that, and that is on that YouTube. It's, I think, investor relations #2, part 2. So,
Okay. Oh,
yeah.
can I throw one more in here?
And then he's gonna answer the question.
For the angel conference,
Yeah.
it is an equity investment, so.
Yeah.
You will be giving up whatever you want. You're raising money, it's not a grant, it's not free money, it's not.
Even the 200, the price. also?
200K.
So that-
There's no grant.
Okay, it's against equity.
Yes.
Yes.
It is an equity
It-
investment.
yeah.
You set the terms, so.
Are you,
Convertible notes.
so then just like, is there like 50 angels or 10 angels or 6 or 7?
Oh,
or like,
That's a good question.
that like you have to talk to and give
No.
reports to, or is it like 1, is it 2? Can you choose who
You're
you're?
talking about after you've received the
Yeah.
investment.
Yeah, yeah.
You'll have one person that you contact that you'll be required to submit what's called information rights, and usually monthly reports. Any investor is gonna ask for that, so. it's
Okay.
Part of the deal.
But you're only talking, that's why we have a fund manager.
Yeah, you're not gonna talk to 50.
Yeah, and then the fund, I'll get to your question. The fund is, let's say we have 75 investors, they can invest 5,500 in 1 unit, up to 4 units. They have 4 votes to vote for you going on and on and on in the process. And the fund is a lot of investors that give 1, 2, 3, or 4, or passive units. Passive units, up to more, but they don't get more votes. So, and you will be only talking to the fund manager who is in charge of the fund.
That Priscilla Lookers.
No, it's somebody else, Amit.
Are these just agnostic investors, or are they kind of just from every industry or specific?
Every industry, there's like Benton and me are 2 investors in the fund. I mean, you're investing here, right?
Yeah, so we don't know who all is gonna be. It's usually a wide variety of investors, industry agnostic, I would say, but you'll have people who work in biotech, you'll have people who work in space tech or clean tech or finance.
Where is that concern coming from? I want to address that.
No, just.
Okay, just information.
We're a AI lab, so.
Yeah, no, the reason why I'm asking that is because because we have investors coming from all different kinds of industries, we rally each other. Like, I don't know that much about clean tech, but like, he's amazing at clean tech and all of that. So if I'm evaluating a clean tech company at SDAC, well, we are, Benton will probably be a lead on that conversation. Everybody putting you into the work, but the conversation and the due diligence team will work together with, if they don't even have the expertise on their team, they will ask others to come in and do the due diligence for the finals. Does that make sense? So like, you do get the fair shake of the evaluation. I would say the one that does not is the first evaluation, because you're like 150 applications. If you don't have a good video and all that, and you have the best technology in the world, we won't be able to know that.
Yeah.
Right, so that makes sense. I just want to make sure, yeah.
So say you're in a space like construction automation, where there's maybe fewer investors in that space. And you go forth and you win and you're happy. The investors that are in that space, would you be able to connect with them directly in some sort of formal way, or would that be informal that feels?
Oh, so like if there's an investor in construction within SDAC, would you be able to connect with them?
Yes, yeah, absolutely. And we see this every year as everyone focuses on the one company that actually wins the big pot. We usually fund a handful of companies, and then there are, through the 3 months of the process, investors who specialize in a certain thing or see something in a founder they really like, and they invest outside of SDAC, or they start a different fund. So we see that all the time. And yeah, there'll be niche industries. The construction is niche, but there will be niche industries and niche investors that match up. And maybe it's not all 75 people who see that connection that they get funded in that way. So it happens all the time.
So yeah, I want to just like encourage you to think about that. It's not the win. It's like, if you get to quarterfinals, even if like the application, somebody absolutely loves your application and they're in construction, they can talk to you outside of SDAC. You might not continue at SDAC because of XYZ. I don't know what it is, but they will start having a conversation with you and you might get investment from them. Like that would be fantastic, right? That is the power of SDAC. And what we do also is we market our lists. Right, so the application list, are we marketing application list this year? Because every single year we do. Like we talk about like who are applicants. Yeah, so we publish the applicant list. We publish quarterfinals, semifinals, and finals. So you can claim, I'm a quarterfinalist, and you can market that. And investors are like, oh, there are quarterfinals. And then you're like, yes, I am. Come look at me. And then it might not be the finals, but you might pair off and get that investment. So we see a lot of that.
Free press,
Yeah.
free PR, not traction, it's free PR.
Yeah, yeah. One more question and then, one and one.
All right, is the competition against everyone in this room, or is there like a whole nother group of people at San Diego State?
It's, everybody's coming from different places and also nationwide.
Oh, okay.
So, we get a lot from East Coast, Texas. I mean, I think that yesterday we had a slide of where everybody is all across the United States, Alaska, Seattle, Colorado, East Coast, all of them. So you're against a lot of different, you know.
When the fund manager changes as well, does the person who won have to report to the new fund manager?
Yes, Amit's already in. Like
Okay,
we've
but-
already, yeah.
but if he changes, if it changes someone else in 2 years, is the company's?
No, Amit will always be the fund manager for the company that wins this year. Like for me, I'm fund 1 manager, he's fund 2 manager. I still continue to converse 7 years later with the same entrepreneurs. I am their liaison.
Cool.
Yeah, we sign our lives away and it's volunteer, peoples. We don't get anything in return. So, yeah. And then you had a question. You had a question?
Yeah.
Yeah.
So it's partly related to both of you. I can talk separately. I am a professor at UC San Diego.
Mhm.
I got about $14 million fund.
Yeah.
10 patents.
Mhm.
All that is transferred to my company.
Mhm.
So do I use that as part of traction, or because these are all very competitive,
Yeah, of
getting
course.
the patents awarded
Yeah,
is
yeah.
also.
Yeah, of course.
So
Yeah.
where would I put it?
Traction.
It's part of traction.
Yeah, it can be traction, it can be your milestones. I mean, you're in you're in life sciences, so the rules are a little different for life sciences, because everyone knows there's a lot of non-dilutive funding, a lot of binary outcomes, for every, FDA round. And you can call it whatever you want, but absolutely make sure that the world knows you have patents and that you have non-dilutive funding. All the 14 million is R&D money that came from, it's non-dilutive, it's grant money, right? Yeah. Yeah, don't,
And I would say that,
doesn't really matter what you call
But
it.
it did come to the company, that was the question.
Yeah.
It came to UCSD where I was employed.
yeah,
And the startup is spin-off from.
yes, I would say going back to that is the story that you're going to tell in your pitch deck is really, really important. So if you feel like the traction slide is where it really hits the hardest about the patents and all that, I would put it there based on the story that you're trying to tell, or that you're like, I have an incredible timeline that I need to have it 3/4 of the way through the slide deck, and I'm going to show that this is where we're at. Maybe that's a better slide to put it on. CPG companies, sometimes I'm like, when they're talking about consumer product goods, if they are at like slide 3 and they have their product and it is patented, I say, you know, put a little like a little something, a little ribbon or something on the product, so that it just like slides in there. And then when you're looking at the traction, you're like, these are the patents that we got, right? So the story gets brighter and richer. A question in the back and then you, and then we have to stop, right?
Yeah, so we
Okay.
started a little late, so we're, oh,
Do you
yeah.
have- Yeah.
Yeah, I was gonna ask, speaking of stories.
Yeah.
So where would you put founder story if put it in the deck?
Your founder story?
Story.
Yeah, like would.
Oh, yeah, well, you're gonna be talking about that from the minute you start talking.
Okay.
Your 1 minute pitch should be a lot about you, your vision and your story. If you have a great team, I love to learn about the team really early. A lot of times we'll talk about the problem and the opportunity slide and the TAM Samsung, and won't get to the team until like slide 10. And I would have loved to have known that you worked at other companies and you've done all these things and this team came together to build this monster company. I would love to know that up front. So you can play around, don't fall in love with the format. And I like to see team up front, I like to see traction up front. And some of the broader problem solution things maybe later on. But just depends on.
Depends on.
Yeah, I mean, depends
Yeah.
on the industry too.
And also, like, I've seen too that some accelerators like for the founder story to be like slide 2. And when I see it slide 2 and there's a certain format, I'm like, they went through that accelerator. And is it part of your story? Probably not. So just know the purpose why you put these things in the slide format that you do. The other way that I've seen work really, really well, and going back to like let's say a fashion company. I was working with one of the entrepreneurs here at the Brink, and it's like, it was like fashion for kids, and it was super cute and all that. But these two ladies were like at L'Oreal and like at like Tory Burch for like 15 years. And I'm like, okay, girls, you need to put that in like slide 2 or 3, because you're painting a picture for the first like 3 or 4 slides of like this cute little like company that's super cute. It's like, no, like you guys know what you're doing. So just know the purpose why. Like the AI lab, like for your senior AI, you might want to really say, okay, I'm going to do slide 2 or 3 or 4, our team, because man, it is like our team got together at the perfect time. It's the right time to do this, blah, blah, blah. And then be like, okay, this is our product. It might be more punchy like that, or it's like, this is the product. Like it's crazy good. And then this is my team because we're in back of this product. I mean, it just depends on the story. One more question.
Yeah, for the next presentation,
Mhm.
we did a form company yet.
Mhm.
Present or because we are planning to open a company.
Oh, yeah, for next week, yes,
Yeah.
come and do your
Yeah.
1 minute pitch, absolutely.
Yeah, it's.
Yeah.
You have a company
we will
name?
form Company.
You have a company name?
Do you have a company name?
A company name?
We don't have a company. yet.
Okay, we'll make one up.
Yeah.
We don't have a company.
Yeah, we-
Yeah, a company name. Okay, yeah, good. Yeah, I would do that. Yeah, I would do that.
Yeah, basically, I presented and we have a co-founder from the Stanford
Yeah.
University.
Yeah.
State here, and we
the idea is like more than 3 years we have worked on it, but we can form a company.
Yeah, I would,
First two bits of what you said were the beginning of a really good 60-second
Yeah.
pitch. Just leave out that part that we don't have a company and you're on your way.
yeah. Well, thank you, everybody, for coming.